Hello friends, my name is Vinod Kumar Agarwal, Chartered Accountant and Certified Public Accountant of USA. We have given all the accounting standard video lectures on our YouTube channel AS Foundation. So please join and subscribe our YouTube channel AS Foundation. Here you will get all the video lectures on accounting standard covered in detail. Some standards we have covered 3 to 4 lectures also. In some topics we have covered 30 to 40 questions. This will make you completely exam ready. There are no better lecture than accounting standard than our lecture. Like for example, in EPS we have covered 30 to 40 questions. In impairment standard we have covered so many questions. Difficult topics like employee benefit or investment in associates and joint ventures, we have covered many topics. So immediately like this video, subscribe to our YouTube channel and share this with all of your friends. Share in all the WhatsApp group of your student Telegram group so that everybody will be benefited. Complete accounting standard lecture covered in detail in our YouTube channel AS Foundation. Today we are going to start Introduction to Accounting Standard. Very important topic. One has to understand in this topic why accounting standards are important, what are accounting standards, what are the benefits of setting accounting standard, and what is the applicability of accounting standards. So all these issues we are going to cover in this wonderful chapter, Introduction to Accounting Standard. Please open your notes. First paragraph I have covered the basic introduction of accounting standard. So the first paragraph says, as an accountant we have to prepare financial statement. The financial statement is the end output of your financial accounting process. Whatever accounting you do, whatever accounting policy that you apply, finally what is the end output of that? The end output is financial statement. Financial statements are balance sheet, profit and loss account, statement of cash flow, notes to account, and therefore this financial statement form the basis of decision making for many users of the financial statement. The shareholder, the investors, the management, they are looking at the financial statement for decision making purpose. Different entities can follow different accounting policies, and if different companies will follow different accounting policies, then their financial statements will not be comparable. You will not be able to compare financial statement of enterprise A with enterprise B if they are following different accounting policies. Here comes the role of accounting standard. What it does, it tries to bring standardization in accounting process so that different enterprise will follow same accounting policy for same transaction and event. Like for example, two software companies in India, Infosys, TCS. You can compare their balance sheet, you can compare their financial statement better if they follow uniform accounting policy. If their accounting policies are standardized, then it is easier to compare financial statement of different entities. What are accounting standards? So accounting standards are the rules, set of rules prepared by the expert committee. In India, this is the job of the Institute of Chartered Accountants of India. These are the rules prepared by the Institute of Chartered Accountants of India in relation to recognition, measurement and disclosure of financial information while preparing financial statement. So three terms you can underline in your notes: RMD, recognition, measurement and disclosure. Recognition means when should an item of asset or liability or income or expense should be recognized. Measurement means at what amount they should be shown in the balance sheet, and disclosure means how the information should be presented and disclosed in the financial statement so that it will be very useful for the users of the financial statement. My next point is, what are the objectives of accounting standard? In the same first paragraph we have mentioned, and you can underline the important ones, objectives of accounting standards. Objective of accounting standard is: 1. To standardize the accounting principles and policies. Different entities should follow same accounting policy in the similar cases, similar events, similar transaction and similar situations, so that their financial statements are comparable. Even for the same entity, same standards should be followed, same policy should be followed in the current year which was followed in the previous year, so that on year to year basis also we can compare the accounting policies. Second objective of accounting standard is to present true and fair view of the operations of the financial position. That is, as a user of the financial statement, I want to know what is the true and fair financial statement. Is the balance sheet representing true net worth? Is the profit and loss representing true profitability position? Therefore, we need standards. High quality accounting standards are necessary and important element of a sound capital market system. Something very important. What they are trying to say, if you follow high quality accounting standard, then investors will have faith on the financial statement prepared by the company. They would trust the financial statement. On that basis, they will evaluate the performance of the company, they will understand the profitability of the company, and they can take a more informed decision about the performance and the profitability of the company, and they would be interested in, they will be confident in investing in that company. Accounting standard reduce uncertainty. If different company follow different accounting policies, same company follow different accounting policies in different year, it will create uncertainty, whereas accounting standard would bring uniformity, certainty, efficiency, very important, investor confidence in the financial reports, and they can take more relevant decision. They can rely on the financial statement, they can compare financial statement of 2 or more enterprises, and their financial statement would be transparent. India wants to raise funds from abroad also. They want foreign investors to come and invest in India, make in India, bring capital into India. But why will the investor invest in India? To convince them that you should invest in India, we have to give them our financial statement. We have to tell them, see, this is our profitability, this is our balance sheet. But they should trust those balance sheet, they should trust those financial statement, and that is possible only when the financial statements are prepared using high quality accounting standards. Otherwise, users may not have faith in such financial statement. Come to next heading, Indian GAAP. GAAP means generally accepted accounting principles. Generally accepted accounting principles. You can note down if you want. GAAP means generally accepted accounting principles. Okay, have you noted it down? So what will be included in the Indian GAAP? The Indian GAAP would include accounting standards issued by ICI. Indian GAAP will include accounting standard issued by ICI. It will include guidance note issued by ICI. Guidance notes are not mandatory on the corporates, but they give guidance about certain transactions, how they should be accounted for. like for example guidance note on ESOP, employee stock option plan is there, which is not an accounting standard. Then if certain things are not clear in accounting standard, they need more interpretation, then institute will come out with accounting standard interpretation. Then the next is the institute from time to time comes out with general clarification also, a list of clarification issued relating to accounting standard. Then we have Companies Act. Companies Act have so many paragraphs, so many sections dealing with accounting. They will say that companies have to follow accounting standard issued by the Institute of Chartered Accountants of India. The auditor has to ensure that all accounting standards have been followed. If not, he will qualify the audit report. Management has to also ensure that accounting standards are followed. If not, then the directors have to explain why accounting standards were not followed. There are Companies Act Schedule 3 which provides you the format for preparation of financial statement. So I have made a small list of what are the various provisions in Companies Act dealing with accounting, reporting and disclosures. Companies are required to maintain books of account under double entry bookkeeping system. Then companies have to follow mandatorily accounting standard issued by the institute. You can just mention here, given in section 129(1), Companies Act Schedule 3 gives you the format of financial statement. In Companies Act Schedule 2, you have depreciation rates also. Then Companies Act has provisions prescribing treatment of general and capital reserve. In addition to Companies Act, there are laws which provides format for companies like insurance companies, banks and electricity companies. All this put together will form Indian GAAP. In India, there are two more regulatory agencies which also provide guidance on accounting. SEBI. SEBI provides guideline for listed companies, companies which are listed and traded on the stock exchange. So SEBI has made certain disclosures to be given by the listed company in the annual report. They have also given formats to be used by the listed company for their quarterly disclosures. As you know, listed companies are required to give quarterly disclosures. The format is given by SEBI and listed company have to follow those formats. RBI, it deals with usually banks and NBFCs. RBI is the boss of bank and NBFC. RBI from time to time provide guideline on income recognition by banks and NBFCs, asset classification, provisioning requirement, provision for doubtful debt. How much provision should be made is provided by RBI. Asset should be classified as standard or substandard, that is given by RBI, or assets are also classified as doubtful or loss asset. Now who gives guideline on this? Your RBI. RBI tells the bank this asset is standard, good quality asset, this is bad, this is substandard, this is very bad, doubtful, and this is very bad, that is loss asset. So that will be given by the RBI. Institute issues from time to time general clarifications, and they have also issued ASI, Accounting Standard Interpretation. First question, what are general clarifications and ASI? Who issues them? 1. They are issued by the Institute of Chartered Accountants of India. Why they want to issue general clarification and ASI? Sometimes certain things are not clearly given in the standard. They require more interpretation. They require more clarification because there can be more than one interpretation of that, or it may not have been explicitly covered by the standard. Okay, then they issue general clarification. Like for example, when accounting standard 21 was issued, consolidated financial statement, companies had lot of queries. How to deal with this? How to deal with this situation? An institute have come out with a list of general clarification. Or when accounting standard 22 was issued, income tax, accounting for income tax, again we had lot of queries. How to do accounting for situations when you have tax holidays, okay, long-term capital gain. The institute has come out with certain general clarification and accounting standard interpretations. Now remember, my learned student, accounting standard interpretation are equivalent to standard only. Okay, they have the same weightage as that of accounting standard. That is, companies are required to follow accounting standard. Companies are also required to follow accounting standard interpretation. Even the auditor has a duty to ensure that not only accounting standard but also ASI have been followed. Okay, and if you don't comply with ASI, then the auditor will qualify the audit report. Okay, and the auditor will say that in their opinion, financial statement does not reflect true and fair view. Even the management of the company will have to give an explanation as to why certain accounting standards were not followed. Next question is, do accounting standards override local regulation? Do accounting standard override local regulations? So the answer is no. If suppose accounting standard and law, there is a conflict, AS says something else, law says something else, which one will prevail? Which one will prevail? Law will prevail. The law has got more power than accounting standard, so law will prevail over the accounting standard. Law has more weightage than the accounting standard. Okay, like we have schedule 3 format, that will be followed. We have depreciation schedule, that will be followed. Whenever there is a court order, high court order, supreme court order, and if they say that a certain treatment has to be given, even if it is contradicting accounting standard, even if it is inconsistent with the accounting standard, the company will have to follow the high court order while doing the accounting of that transaction, and it has to give a disclosure. Even the auditor report would require such disclosures. In these cases, auditor may state that the mandatory accounting standards are not complied with, subject to or an adverse opinion on true and fair view of the financial statement. But the simple thing you have to remember here, if there is a contradiction between law and the accounting standard, law will prevail. If there is a contradiction between court order and accounting standard, the court order will prevail and the company will have to give disclosures. Are accounting standards mandatory under the Indian Companies Act? Are accounting standards mandatory under the Indian Companies Act? Can Institute of Chartered Accountants of India make accounting standards mandatory on companies? The answer is no. Institute of Chartered Accountant of India cannot make accounting standard mandatory because it is not a regulatory body. Its job is to issue accounting standard. Its job is not to make accounting standard mandatory on the companies. But if there is no legal backing, then companies will not follow accounting standard. Therefore, SEBI and Indian Companies Act have made implementation of accounting standard compulsory. SEBI has made it compulsory for listed company, and Companies Act in general has made accounting standard mandatory for corporate sector. So both SEBI and Companies Act will require the auditor to qualify the audit report if they do not comply with the mandatory accounting standard. So summary is yes, accounting standards are mandatory under Companies Act for all companies, and listed company SEBI makes it mandatory. You can just mention in your notes, those who have the notes with them, that section 143 3E of the Companies Act, and hence the companies have to follow, the limited companies have to follow accounting standards, whether it is a private limited company or public limited company or listed company, they have to follow accounting standards. Even the board of directors of the company has a responsibility to follow accounting standard. If they don't follow accounting standard, they have to report which accounting standard was not followed, why there was a deviation, what is the financial effect of that deviation, that will be disclosed by the company. Next question is, do accounting standard apply to charitable entities? Do accounting standard applies to cooperative society? So we should know this answer, that generally accounting standards are applicable to all cooperative societies, all non-profit organizations, as long as they are involved in underlying commercial, industrial or business activity, as long as they are involved in commercial, investment, industrial or business enterprises, but they do not apply to purely charitable entities. Purely charitable means no commercial, no industrial, no business enterprise, no commercial activity. They receive donation and they use the donation for the respective purpose only. They take donation and they use donation for respective purposes only. They do not involve themselves in any commercial, industrial or business activity. Then accounting standards are not applicable to such charitable institution, but it has to be purely charitable entities. But if charitable entities are engaged in business activity, commercial activity, even if the commercial activity is insignificant, then they have to apply accounting standard to their entire activities. Even if suppose 1% of their total activities is commercial, business, the accounting standard will become applicable to all the activities. Then accounting standards will be applied for each and every activity, whether charitable or not. Accounting standard would apply to all its activities, even if it is not commercial, industrial or business in nature. Theory question in the exam: what are the advantages and disadvantages of setting accounting standard? How accounting standards are beneficial for the entities? First of all, it will help the stakeholders of the company to take more informed decision. Who are the stakeholders of the company? Please name any 4 stakeholder of the company. Any 4 stakeholder of the company? Yes, stakeholders of the company would include the shareholder, the management, the potential investor, employees, debtor, creditor, all of these parties, government. These are interested in performance of the company. They want to know how the companies have performed. Therefore, if financial statements are prepared using high quality accounting standard, it will be easier for them to understand the performance, compare the performance, trust the financial statement. Second reason is to reduce the number of options available. To reduce the number of options available in preparation of financial statement. For example, let us look at Accounting Standard 2. It only allows few methods for valuation like FIFO, weighted average, specific identification method. They do not allow LIFO, not allowed. They do not allow HIFO, highest in first out. They do not allow next in first out. They do not allow simple average. So most of the companies would be now following FIFO or weighted average, and companies which are involved in job costing, batch costing, where the work is performed as per the order of the customer, then they follow specific identification method. So this is the purpose of standard. Otherwise, if every company follow different methods of inventory valuation, the comparison will become very difficult, financial statement will become more confusing. Instead of helping the user, it will confuse the user. Third advantage of accounting standard is it provides disclosure about the accounting principles, treatment. Okay, even if certain things are not required by the law, accounting standard ends with a list of disclosure requirement. With the help of disclosure, the user can understand the financial statement better. So you get disclosure about lot of other information which may not be contained in the balance sheet or profit and loss account. And as usual, once again, accounting standards are required because they will make possible comparison easier and make financial statement more reliable. But what are the disadvantages of standard? The disadvantages are that they are making financial statement preparation more rigid. That is, they do not allow multiple treatments. They will only say every company will follow same treatment in the same situation. But so many companies operate under different economic environment. The management's style of doing business can be different, and therefore just following one particular solution may be unduly restrictive, unnecessarily restrictive. It limits your freedom, it restricts your freedom, it reduces your flexibility. That is one of the drawbacks of accounting standard. It doesn't give you choices. So if it doesn't give you choices, then you are not flexible, and that is why, what is the second point? It makes the accounting process very rigid and inflexible. Companies cannot apply different policies, even though their business model can be different, even though they may be operating under different economic environment, even though their scale of operations can be different, but still we have to follow same policies. And third point I have already explained, if there is a contradiction between law and accounting standard, law will prevail, and therefore it seems accounting standards are not very useful because it can be easily overridden by the law. Law can easily bypass the accounting standards. Now next, tick mark the procedure in the issue of an accounting standard. How in India accounting standards are issued. It's a lengthy process. It is not something which can be done in a hurry, because there are lakhs of companies who are going to follow this accounting standard. So institute follows a democratic process. It takes the suggestion, criticism, feedback of various parties involved, and after that they issue the accounting standard. and after that they issue the accounting standard. So one day you can also become a part of institute's accounting standard setting board, that is called ASB, Accounting Standard Board. So first step is we need to determine the need of accounting standard, that is in which area do we need accounting standard. First we have to find out in which area do we need an accounting standard, then whole process will begin. So initially accounting standard board determines the broad area in which accounting standard needs to be formulated, okay, and the priority in regard to selection thereof. There are so many areas in accounts where you need to have accounting standard. For your kind information, earlier there was no accounting standard on leases. There was no accounting standard on income tax accounting. There was no accounting standard on intangible asset. So but the institute thought these are important areas. If we don't have a standard on leasing, income tax accounting, intangible asset and so many other standards, then it is difficult for users to understand the performance of different entities, because different entities can follow different accounting standards. Is it right? And with that, slowly and slowly they have introduced accounting standards in many areas like leasing, earning per share, consolidation, or intangible asset, income tax accounting, employee benefits. The purpose is that different companies should follow same treatment for similar events and transactions. Then what they will do, once they have identified the need for an accounting standard, they will constitute a study group. A study group means a group of members of institute and other bodies, okay, to assist the accounting standard board in its activities will be constituted. So first need for AS, second constituting a study group, and then this study group will draft the accounting standard. After a lot of research, debate, discussion, feedback, they will come out with a draft accounting standard. It is not the final standard, because you need to again take the feedback of the stakeholders before you issue the final draft. So the study group will have a draft standard which will contain objective of the standard, scope, definition of the different terms, then they will give recognition and measurement principle, and presentation and disclosure. The study group will present the draft and it will submit to the ASB. ASB will consider the preliminary draft prepared by the study group. Now ASB will sit down and check what they have done, okay. When any revision is required, they may not agree to each and every points written in the draft standard. They may want certain revision. They may want certain revision in the standard. Then either the ASB will make those revisions, or it may refer the same to the study group again, or they may ask the study group that in the opinion of accounting standard board certain changes were required. Like for example, whether a girlfriend should be included in related party or not, question mark, whether the girlfriend should be included in related party or not. So originally the study group had said in their draft report that a girlfriend will also be included, boyfriend will also be included in the definition of related party. But then the accounting standard board says, sorry, in India we can't include such relationships in the related party. So they have asked the study group that you please make the changes and exclude such relationship, because it doesn't fit into Indian culture for the time being, okay. After the revision is made, the draft standard, now it will be circulated amongst the different stakeholder. to take their opinion also. So step number 5, the draft will be circulated to council member of the institute. See, institute's highest body is called council. The council member will now go through the draft standard. It is also circulated amongst the following bodies: the ICWI, ICSI, DCA, C&AG, CBDT, Standing Committee of Public Enterprise, RBI, Indian Bank Association, SEBI, SOCHM, CII, FICCI, and any other body, because these are the bodies which are basically dealing with lot of corporates activities and financial transactions. So their opinion is also sought. Step number 6 is holding discussion and finalizing the exposure draft. Now they are going to have a meeting with the representative of various specific bodies on the draft standard, and based on comment and discussion with the representative of specific bodies which we have read above, they are going to prepare a final draft which is called exposure draft. That means now it is almost ready, but still now they want public comment. Okay, so this is exposure draft. Circulating the exposure draft. This exposure draft is not circulated just among the members of the institute, it is also circulated amongst the public. So nowadays what they do, they upload it on their website and they will ask members of the institute, chartered accountants like us, and even the students can comment if you want. Public can also comment. Anybody can give their comment and opinion on the exposure draft. Exposure draft is also sent to specific bodies also, the same list which we have seen, and it will be sent to stock exchange, other groups, okay, etc. Once they receive the comment and feedback from different bodies, members of the institute and the public, they are going to prepare final draft. So first a draft is prepared by the study group, then there is an exposure draft prepared by ASB, and now they are going to submit the final draft to the council of the institute, and the council may modify the final draft, or the council may issue the accounting standard. So council may consider the finalized draft standard, and if necessary modify the same. If required, they will modify, and then finally the accounting standard is issued in India. Okay, so this is a long process. It might take few months to few years also in finalizing the accounting standard, because you need to consider the opinion, the comment, the feedback of so many parties involved. Okay, so those students who have our book, please delete the next paragraph, Companies Accounting Standard Rule 2006. Delete that whole thing. Delete the next page also. Again delete the next page. Again delete the next page. And finally you come to page 1.7, where we have written criteria of non-company entities on which accounting standard shall be applicable. Come to this paragraph, page 1.7 in the notes. Before that, you delete everything, because in the last few months there have been amendment in the applicability of the accounting standard. So I am going to explain you now the current applicability of the accounting standard. This applicability of accounting standard, please note down in the notebook. Whatever I will ask you, that you will note down. Other things are printed in the notes. Applicability of accounting standard. We'll discuss corporates and non-corporates. Corporates means those companies which are registered under Companies Act. Non-corporate means other than companies, which will include the individuals, partnership also. Okay. So our paragraph on page 1.7, applicability of accounting standard to non-company entities. Applicability of accounting standard to non-company entities. First, today we'll see non-company entities, and then thereafter we will see the corporate entities. You will see this paragraph in our book, page 1.7. Before that, please delete everything to avoid confusion. Okay. After the paragraph, procedure in the issue of accounting standard, you will directly come to this paragraph. Amendment to criteria of non-company entities to which accounting standards shall be applicable. Earlier there were three levels of entities, but with this amendment they have made it 4 levels of entities. And how to understand the applicability, let us focus on that. For the purpose of applicability of AS, the Institute of Chartered Accountant has classified the entities into two companies, two segments. One is called company entity and the other is called non-company entity. As we have discussed, non-company entities, example, sole proprietor, partnership firm, trust, HUF, AOP, association of person, and cooperative societies. So these are non-corporate entities, and the standards will be applicable even to non-corporate entities. These non-corporate entities are divided into 4 levels. Earlier there were 3 levels, but you forget that. Now you have to concentrate on 4 levels. Now the question is, why we have 4 levels? Why earlier it was 3 levels and why it is 4 levels now? The reason being, accounting standards are little complicated. If the enterprise is a very small enterprise, for them following such complicated accounting standard would be little difficult, because they may not have the resources or manpower or the necessary softwares to apply this complex accounting standard, and therefore certain relaxation, exemption are given to these non-corporate entities, because some of them may have just one employee only, some of them may be having only one proprietor and his peon also and is the owner also, and then you are telling him you apply accounting standard 28 impairment of asset, apply accounting standard 15 with all such detailed disclosures. He'll go mad. He will say, I will not do anything. Okay. To reduce stringency on non-company entities. Stringency means strictness, which were earlier required to comply with all AS in pursuance of being level 1 entities, as the norms for the same have been revised. The purpose of making 4 classification is to reduce the burden on non-corporate entities, especially those which are smaller firms, smaller companies, smaller businesses. For them, forcing them to follow all accounting standard as it is with all the requirements will be a tough task. Okay. So let us see the applicability. The scheme is now, the revised scheme is now applicable for accounting period commencing 1st April 2020. So first you have to underline 1st April 2020. Okay. Now non-corporate entities will be classified into 4 levels. They are called large, medium, small and micro. In short, they will be called as this last 3, medium, small and micro, will be called MSME, medium, small, micro enterprise. MSME, medium small micro enterprise. These medium small micro enterprises, they are given certain relaxation, certain exemption, okay, and the maximum burden would be on large entities to comply with the accounting standard. Entities which are belonging to level 2, level 3, level 4 means MSME. MSMEs are granted certain exemptions. Okay. Next point is, it is to be noted that applicability of AS has been made milder. Milder means easier, less strict, low strict. Level of strictness will be reduced as one goes down from 4 level of the entities. That is, the maximum relaxation or exemption will be given to level 4 entities. Why? They are very small. They are very small entities. Maybe the turnover may be less than 50 lakh, 60 lakh, 10 lakh, and how will they apply such difficult accounting standard? Think yourself. Okay. And that is why as we go from large entity to micro entity, the relaxation will keep on increasing. The exemption will keep on increasing as we move from large entity to micro entity. So what are the disclosure requirement for non-companies? They are required to disclose that the accounting standard has been complied with. All these non-company entities will have to disclose that accounting standards are complied with. They have to disclose the level to which the entity belongs, that is whether they are level 1 or level 2 or level 3 or level 4 entities, and whether it has availed exemptions granted to such level. Second thing you have to disclose, that have you taken exemption which was granted. Third point, underline for a question in the exam also, I would ask you to underline third point, availing of partial exemption. Availing of partial exemption. First I'll read, then we will interpret. It is to be noted that active entities are allowed to cherry pick the exemption they intend to avail. Sir, what do you mean by cherry pick? Cherry pick means selective exemption application. For example, you may be allowed 3 exemptions. Example only. You may only avail 2 exemptions. You may say, no, I don't want all 3 exemptions. I want only 2 exemptions. I want to give more information as required by standard, even though I am eligible for exemption, but I don't want. I want only partial exemption. Are you allowed to do that? Yes, you can do that. Okay. But you have to ensure that such partial availing of exemption should not be misleading. Second, that the entity has cherry picked the exemption and not availed all the exemption granted to such level should be disclosed as to which all exemption it has availed. Okay. So in case you have not availed few exemption and you availed few exemption, first you have to make a disclosure that we have only taken partial exemption, and second, which all exemption you have availed, that you need to disclose. Now come to the next is transition. Very important paragraph transition for a numerical question, or for a theoretical question on that. Transition means you may move from micro to small to medium to large, because your sales may increase or your borrowing may increase. So there is a possibility that a micro enterprise may become small, small may become medium, medium may become large, but the journey can be backward also. A large entity might become medium because of whatever criteria they have given, which we will see next in the next paragraph. A medium enterprise may become small, small may become micro. Okay. So from transition from a higher level to lower level, large entity has become medium or small. Now as you have read, these entities are given certain exemption. Will the large entity get exemption immediately on becoming a medium or small enterprise? The answer is no. The relaxation exemption of the lower level may be availed only on staying at such level for 2 consecutive years. So if a large entity becomes medium, it will not get exemption for 2 years. Only if it remains a medium enterprise for 2 consecutive years, then it will be entitled to the exemption of medium enterprise. And there is a reverse possibility also, whose chance is more. A small enterprise may become medium, and a medium enterprise may become large. Then what are the transition rules? While the disclosure pertaining to higher level becomes applicable, from the year you move from small to medium or from medium to large, disclosures of the higher level will become applicable. However, no change or revision is required to be made in previous year. But are you going to revise the previous year data also? Are you going to revise, because some exemptions were availed in the earlier year and now you have moved into larger category? So are you going to make revision in the previous financial year also? The answer is no. When the entity was classified as a lower level and had availed exemption or election is required to be made. Do not revise previous year data if you move from a lower level to higher level. Restatement of previous year data is not required. However, disclosure of such fact is required to be made in the notes. Only you have to make a disclosure that our entity, which was earlier a smaller entity, has now become a medium entity, or our entity was a medium entity and now it has moved into larger entity, but previous year figures are not revised. That disclosure you have to give. Now, my dear and good students, I have made a summary of different levels, criteria and applicability. Okay, this first column was the old criteria, so we don't need to read this paragraph anymore. Only if you are interested as a general knowledge gaining candidate, then this column you can read. Otherwise, for purely exam purpose, the criteria which was there till 2019 is no longer applicable to your course, and we are also not going to deal with that. Is it right? So our first criteria for non-company entities is large. When will a non-company entity be called a large? Very, very important. There are 5 criteria given. If you fulfill any of the 5 criteria, any of the 5, welcome, welcome, welcome to the world of level 1 entity. Is it right? So first is listed or to be listed entity, which will include entities listed on overseas exchange also. Entities listed on overseas exchange also. This will be little difficult for non-corporate entity, because usually the companies which are in the corporate form, they are only allowed to be listed. However, if for any reason, if there is any non-corporate entity which is listed or which is about to be listed, even if they are about to be listed in a foreign country, then they will be called level 1 entity. In India for the time being, bank, including cooperative banks, financial institution, insurance companies, they are treated as level 1 entity. They are treated as level 1 entity. Institute will test you basically on these 2 points more. Institute is going to test you on these 2 points more. Entities whose turnover excluding other income is more than 250 crore, whose turnover is more than 250 crore, and or whose borrowing including public deposit is more than 50 crore. So either the turnover is more than 250 crore, turnover will exclude other income, or borrowing, but borrowing will include public deposit greater than 50 crore, and then holding and subsidiary entities of the above. The holding and subsidiary entity of a level 1 entity will automatically become a level 1 entity. So if you are a level 1 entity, all 29 standards are applicable in full. Oh my God, no exemption to level 1 entity. So simple way to remember, no exemption to level 1 entities, they have to follow all the standards. Now we'll come to level 2 medium. What is the criteria for medium enterprise? Here the criteria is entities have turnover other than other income, excluding other income, between 50 crores to 250 crore. More than 50 crore but less than 250 crore. So they are called medium enterprise. So one criteria is turnover criteria. Second criteria is borrowing criteria. If the borrowing including public deposit is between 10 and 50, more than 10 crore but less than 50 crore, then they will be called medium enterprise. So either their revenue is between 50 to 250 crore, or their borrowing is between 10 to 50 crore. For turnover or borrowing criteria, only such entities shall be regarded which are engaged in commercial, industrial or business activity. For turnover or borrowing criteria, we are only going to consider such entities involved in commercial, industrial or business activity. And third point is holding and subsidiary entities of the above. So holding and subsidiary entity of a medium enterprise will also be treated as a medium enterprise. If a company has a borrowing, if an entity has a borrowing, but it is not involved in commercial, industrial or business deal, then this is not applicable. Like a pure charitable organization may not follow medium enterprise rules if it is not at all involved in commercial, industrial or business activity. Now the student will have a tough time in remembering the exemption, but there is no choice. Somehow you have to find how to remember this relaxation. Medium enterprise are given certain relaxation. I have made a summary of this useful for you in the last minute reading. For medium enterprise, 3 standards are not applicable. Which 3 standards are not applicable? AS3, AS17, AS20. Okay. Then second exemption or relaxation is accounting standard applicable with disclosure exemption. With disclosure exemption means accounting standard is applicable but certain disclosures are not required to be given. Which are such standard? Standard is applicable, certain disclosures are exempted. AS 19, AS 28, AS 29. Third category of relaxation is accounting standard applicable with certain exemptions. Accounting standard is applicable with certain exemption, means certain paragraphs are not required. Certain paragraphs are not required, and that is AS 15. Okay, if you want to know which paragraph, number, etc. not required, you can refer your institute study module, but I don't think that they are going to ask you the paragraph number of AS 15 which are not applicable. Okay, so this much is enough. Then the fourth relaxation is accounting standard applicable with note. With note, accounting standard applicable with note. Following accounting standard being related to consolidated financial statement, the same is not applicable to level 2, 3, 4 entities unless they voluntarily decide to consolidate the financial statement. So certain standards on consolidation is not applicable. Certain standards on consolidation is not applicable unless you decide to follow them voluntarily. Voluntarily you can prepare consolidated financial statement, but the standard doesn't require. And if you prepare voluntarily, you will have to give a note. If you prepare voluntarily, you have to give a note. So these standards on consolidation are not mandatory on level 2, level 3, level 4, but they can voluntarily follow them with these disclosures. And which are these four standards? AS 21, AS 23, AS 25 and AS 27. Now we'll come to the third level. The third level is called small. Cancel the second paragraph. Only focus on new criteria for classification. So here my criteria for turnover is more than 10 crore but less than 50 crore, and my criteria for borrowing is more than 2 crore but less than 10 crore. If you are using turnover or borrowing as a criteria, then the entity must be involved in commercial, industrial or business activity. And the third is holding and subsidiary entities of the above. That means if you have a holding and subsidiary company, they will also be classified as small. They will also be classified as small. And what are the relaxation, exemption? Again, see a long list. First point is all exemption provided to level 2 shall be applicable. So I am not repeating it again. All exemption provided to level 2, whatever was exempted to level 2 will be exempted to level 3 plus some more. As we go down, more relaxation will come. So level 3 entities get some more exemption. What are these? In addition to the disclosure exemption given in level 2, further accounting standards are not applicable. So two more standards are not applicable. One is AS 18 and second AS 24. For small enterprise, AS 18 and AS 24 are not applicable. Point number B, in addition to full exemption as given in level 2, further accounting standards are applicable with disclosure exemption. So whatever standards were exempted from disclosure, in that list you will also add AS 10 and AS 11 for small enterprise. For medium enterprise, from disclosure requirement, AS 19, AS 28, AS 29 was there. Now you will also have AS 10 and AS 11 from disclosure requirement for small enterprises. So this was small enterprise. Now the fourth category is called micro. all enterprise which do not fit into large, medium, small, by default, they will be called micro enterprises. So micro enterprises will get all exemptions which were granted to level 3 and some more. In addition to full exemption as given in level 3, further accounting standards are not applicable. 3 more standards are not applicable to micro enterprise. Micro enterprise will not apply AS 14, AS 28, AS 22. AS 22 is applicable only for current tax related provision. AS 22 is basically based on deferred tax accounting. Standard is not applicable. Deferred tax part is not applicable for micro enterprise. Only current tax part is applicable. And what about additional disclosure exemption? In addition to disclosure exemption given for level 3, further accounting standard applicable with disclosure exemption. Some more disclosure exemption. Disclosure exemption is further given on AS 13. Okay. So AS 13 also comes under the disclosure part. Next is a note which I have already explained it to you. For turnover or borrowing criteria, only such entities are regarded which are engaged in commercial, industrial or business activity. Okay. So this way you have to identify what is the level of that entity. Is it 1, 2, 3 or 4? And accordingly certain standards are not applicable at all. Certain standard disclosures are not required, and in certain standards certain paragraphs are not applicable. So I have given you a summary of what is applicable and what is not applicable. You should revise it. Okay. Now in your notebook, please note down. In your notebook, just write down few lines. In your notebook, please write down applicability of accounting standards to company entities. Applicability of accounting standards to company entities. Applicability of accounting standards to company entities. Please note down in the notebook. Applicability of accounting standard to company entities. Here also they have divided into two categories: SME category, non-SME category. SME and non-SME categories. Then your question would be, what is SME? What is SME? So SME means, for a corporate entity, SME means a small and medium sized company, small and medium enterprise, small and medium enterprise, and non-SME. If it is an SME, certain exemptions, relaxations have been given to SMEs. Write down, certain exemption relaxations have been given to SMEs. Certain exemption oblique relaxations have been given to SME. And if it is a non-SME, non-SMCs are required to comply with all the accounting standards in their entirety. Non-SMEs are required to comply with all the accounting standards in their entirety. Okay. So now I am going to first check how to identify whether a company is a non-SME or an SME company. How to identify that? Very, very important for exam. So to help you with that, first let us read one question number 1. With the help of this question number 1, I will be able to give you the criteria to identify non-SME and SME companies. Question number 1 in your book. Source of this question is study material. This question I will take. Other questions you will do as homework. Other questions you will do as homework. XYZ Limited, with a turnover of 50 crore. It is a limited, means it is a corporate entity. It's a company entity. So we have to check whether it is SME or non-SME. Turnover is 50 crore during previous year and borrowing is 1 crore during any time in previous year. Wants to avail the exemption available in the adoption of accounting standards applicable to companies for the year ending 31/3/2000 X1. So two important numbers. Turnover is 50 crore in the previous year, borrowing is 1 crore at any time during previous year. Now they are searching for whether exemptions are available to this company or not. Advise the management on the exemptions that are available as per Company Accounting Standard Rule 2021. This rule is now applicable for the purpose of applicability to corporates. So first we will see in your book the answer. This question deals with accounting standard applicability to corporate entities. This standard deals with, or this question deals with accounting standards applicable to corporate entities. According to Companies Accounting Standard Rules 2021, the companies are divided into two categories. Which two categories? SMCs, small and medium companies, non-SMCs. As per Company Accounting Standard Rule, criteria for above classification as SMCs are, means company. How do I identify SMC company? Please remember, this is very, very important. So I will ask you to mark it here. Very to the power 2 important. How do I identify SME company? SME company means whose equity or debt securities are not listed or are not in the process of listing on any stock exchange, whether in India or outside India. Its shares, debentures are neither listed in India nor in the process of getting listed in India or outside India. So even if you are planning to raise funds from New York Stock Exchange, then this company cannot be SME. Okay, if you are planning to raise funds from London Stock Exchange and you filed the paper for listing, then you are in the process of listing and this standard is, or these exemptions are not applicable. Okay, the stock exchange may be in India, outside India. Process of listing means you have filed the documents required for listing with the SEBI in India. SEBI means Stock Securities and Exchange Board of India. In USA it is called SEC, Securities Exchange Commission. Second requirement for SME, it should not be a bank, it should not be a financial institution, or it should not be an insurance company. Third is whose turnover excluding other income does not exceed rupees 50 crore in the immediate preceding accounting year. So turnover should not be more than 250 crore. Turnover should be less than 250 crore to be classified as SME. Fourth criteria is which does not have borrowing including public deposit in excess of rupees 50 crore at any time in the immediate preceding year, borrowing should be less than 50 crore. Borrowing should be less than 50 crore, and which is not a holding or a subsidiary company of a company which is not a small and medium sized company. It should not be a subsidiary or a holding company of a non-SME company. If you are a holding or a subsidiary of a non-SME company, you are also classified as non-SME company. If parent is a non-SME, subsidiary is a non-SME. If subsidiary is a non-SME, its parent company will become automatically a non-SME. So if these criteria are satisfied, then the entity will be called SME. Now let us compare the case study with the requirement of the company's accounting standard rules. XYZ Limited has a turnover of 50 crore during previous year and borrowing of 1 crore at any time during the previous year. So turnover is 50 crore. Its turnover is less than 250 crore. Borrowing is less than this 50 crore. It is not a listed, not in the process of listing. It is not a bank, financial institution or insurance company. Turnover is not more than 250 crore. Borrowing is not more than 50 crore. It is not a holding or subsidiary of a non-SME. None of these criteria are getting satisfied, and therefore it is treated as a SME company. Because if any of these criteria would have got satisfied, it would have become non-SME. Had it been a listed company or in the process of listing, it is a non-SME. If it is a bank, non-SME. Financial institution, non-SME. Insurance company, non-SME. Turnover exceeding 250 crore, non-SME. Borrowing exceeding 50 crore, non-SME. Subsidiary or parent of a non-SME, then also non-SME. This company XYZ does not fulfill the requirement of non-SME. Hence, it will be classified as SME companies. So this is what you have to keep in mind. In other words, if you want to be a non-SME, then either the securities are listed on the stock exchange or in the process of listing. Bank, financial institution or insurance company by default are non-SME. Turnover exceeding 250 crore, non-SME. Borrowing more than 50 crore, non-SME. Parent and subsidiary of non-SME is also non-SME. Now write down one note in the notebook. Please write down in the notebook exemption or relaxation given to SMEs. Exemption or relaxation given to SMEs. Exemption or relaxation given to SMEs. Please note it down. If you are an SME, that is a company which is a small and medium enterprise, they are also given some exemption, because the reason is same. If you force them to follow all the standards, they do not have necessary resources, manpower, plus it is expensive also sometimes to follow all the standards. Accounting standard setter knows this problem, this real life challenge of small companies to apply complex accounting standard, and hence some relaxation is given. Write down point number 1. Accounting standards not applicable to SMEs in their entirety. Accounting standards not applicable to SMCs in their entirety. Not applicable means not at all applicable. Enjoy. If you are an SMC company, then you are not required to follow AS 17. AS 17 segment reporting not applicable to SME companies. Second exemption, write down, accounting standard in respect of which exemption from certain requirements have been given to, in respect of which relaxation from certain requirements have been given to SMCs, in respect of which relaxation from certain requirement have been given to SMCs. So you can write there AS 15. AS 15 is a complex piece of accounting standard. Lot of complex requirements are there, like actuarial valuation, complex disclosure requirements, complex calculation requirement, and because these are small companies, they may find it hard to apply AS 15 as it is, because actuary report will also cost them a lot, and for them getting actuary report and paying a heavy fees for that may not be a cost effective exercise. It may dent their profitability. Okay, so give them relaxation. Second, AS 19 leases. AS 19 leases, certain disclosures are not applicable. AS 19, again disclosure requirement of AS 19 are a bit complicated. Okay, it will require some understanding of present value, etc. calculation. For small companies, they may not have necessary trained skilled staff to do that, and getting it done from outside consultant may be a costly affair. So some relaxation is given. Similarly, AS 20 EPS, disclosure of diluted EPS is exempted. Disclosure of diluted EPS. You will study about diluted EPS when you go to AS 20. Today is not the time to discuss in detail what is diluted EPS, but this will be covered in detail in AS 20 chapter. Then next relaxation is AS 28. AS 28 impairment of asset. Again, a complex accounting standard for small companies. They may not have necessary trained skilled manpower to do such calculations. Certain disclosures are not applicable. AS 29, write down. Same thing, AS 29. Certain disclosures are not applicable. Certain disclosures are not applicable. Today you will read all other remaining questions. Okay. And you will also try to solve MCQ questions on your own. You will be able to do it. Most of the questions I have already discussed while discussing the chapter, but as a good student, take out the time, revise the whole chapter again. Revise the whole chapter again, because it's an easy chapter and you can score good marks. Okay, thank you very much. Those who are learning on the YouTube, I request you to join our and subscribe our YouTube channel. We have uploaded all the lectures on our YouTube channel. In case if you want to get the maximum benefit, you can purchase this accounting standard book. Can you see, this is a very comprehensive book, very comprehensive. We have taken lot of efforts, lot of decades of efforts are involved in compiling this accounting standard book. There is no other book in the market which is more comprehensive than our accounting standard book. We can say this for sure. 20 to 25 years of accounting standard data we have compiled, and we have brought it at one place, topic wise, concept wise, and we have covered them in the video lecture. So please share this video with maximum number of your friends on all your WhatsApp group or Telegram group. Unnecessary you will be paying 10-20,000 rupees and you will not be getting the same quality which we have covered in our book and on our video lecture. The video lectures are there for you to see on YouTube channel. Thank you very much. Have a good day.